Welcome to the Deep Dive, the place where we don't just summarize research, we synthesize it. We find those surprising nuggets of knowledge that, you need to be well informed. Today, we are strapping in for a really high velocity look at, it's the core engine of the global economy right now. Semiconductors.
It really is.
It's an absolute battleground driven by this relentless AI boom and, frankly, massive geopolitical tension. So our mission for you, the learner, is straightforward. We're running a sharp journalistic sector analysis on three titans: Nvidia, Micron, and Intel.
Yep, NVDA, MU, and INTC.
We're going to dissect their fundamentals, their momentum, and the most pivotal news that's driving their prices right now.
Absolutely. And the complexity in this space is, it's just unprecedented. We're navigating a true battleground here, defined by AI demand, these massive growth projections, and just huge swings in investor sentiment.
So what's the plan?
So we'll tackle each one individually. We'll contrast their technicals, their valuation stories, and then we'll run a fun, hypothetical, paper money math segment. Let's say a $5,000 investment, based on what the analysts are targeting right now.
Sounds good.
Okay, now, before we start applying any of those metrics, we just had to do the mandatory legal note. This discussion is purely for informational and educational purposes. It's all based on publicly available data, and it does not, I repeat, does not constitute financial or investment advice.
We are analyzing the sources, not telling you what to do.
Exactly.
Okay, let's unpack the market giant first. Nvidia. This isn't just a company anymore. It's like a pure market power grid.
It really is.
We're talking a monumental market cap of $4.23 trillion. And despite that immense size, its growth is still staggering, almost 30% year to date. But the big question that always hangs over Nvidia is, the price tag.
The challenge with Nvidia is that the market's expectations are just astronomical, and the valuation metrics really reflect that pressure of being what they call priced for perfection.
Right.
I mean, if you just group the standard metrics, price to sales at 22.61, price to book at 35.60, they all look unbelievably high. These numbers are telling you the market has already baked in massive, massive future success.
And that brings us to the tension point in the data, because the PE ratio is 43.13, which is high for sure. But the PEG ratio, the price earnings to growth ratio, is surprisingly low. It's at 0.47. And a PEG under 1 is usually a sign of value, which just seems impossible for a company this expensive. So what does that statistical gap tell us?
That single number, the PEG, is truly the core of the Nvidia story right now. It suggests that even with that high PE, the market believes the company's expected growth rate. Analysts are expecting earnings per share to grow by 48.25% over the next 5 years. That growth actually justifies the current premium. And then you couple that belief with their absurd current profitability, like a gross margin of over 70% and a return on equity of 107%, and you start to understand why they're the colossus.
So switching gears to the technicals, even giants feel gravity. While the long-term trend is clearly up, the short-term picture shows some definite fatigue. Performance over the last week is down 3.75%, and the monthly is down almost 4%.
Yeah, that recent dip is really clear in the indicators. The key takeaway is just short-term selling pressure. The stock price is currently trading beneath both its 20-day simple moving average and its 50-day.
So it's cooling off.
Textbook cooling off. The RSI, the Relative Strength Index, is sitting neutrally at about 41.5. which suggests it's not really oversold, but that downward momentum is there. And you have to remember that it's high beta, 2.32, meaning its moves are often way more dramatic than the market.
So why now? The news flow seems to provide the answer. Competition is heating up. We saw that news about Google developing Torch TPU, and it's specifically targeting NVIDIA's CUDA software platform.
And that's a huge threat, not just market share, but their whole ecosystem lock-in.
Exactly.
That absolutely creates a headwind. But another element that really demands attention is the insider activity. Despite this narrative of guaranteed future growth, you have to pause when you see Director Harvey Jones selling 250,000 shares. That's over $44 million just this month.
It's a big number.
Right. And high-level selling, even if it's scheduled, it always makes you question the disconnect between the public story and private actions. Still, the analyst consensus is strongly bullish. They rated a 1.33, a strong buy, with a target price of $257.79.
Okay, let's do our fun with paper money math. Based on the closing price of $174.14 on December 18th, a hypothetical $5,000 investment would get you 28 shares, rounding down.
And if that paper position were to hit that consensus target of $257.79, that would result in a theoretical paper profit of $2,342.20.
Which is a pretty substantial 46.84% gain.
Yeah.
That really underscores how much growth is still baked into those forecasts, even with the recent selling.
Hmm.
All right, next up, let's pivot to Micron Technology, the memory chip specialist. Its market cap is much smaller, $279 billion, but its story is just one of pure explosive momentum. Micron is up an astonishing 195% year to date.
Just incredible.
That kind of return demands we figure out why the market reacted so violently.
The why is actually simple and very tangible. AI requires very specific high-end memory chips, high bandwidth memory, or HBM. And this concrete, quantifiable demand has just radically shifted Micron's valuation landscape.
So it's a totally different picture than Nvidia.
A whole different ballgame. The
Yeah.
forward PE is way lower at 6.41, but what's most telling is the PEG ratio is at an extremely low 0.10.
Okay, so when we see a PEG of 0.10 for a company that's already nearly tripled this year, is that realistic? How much of that is already baked in? What happens if they miss by even a tiny bit?
Well, that PEG of 0.10 is often kind of a statistical artifact of a massive sudden turnaround. It reflects growth expectations that are so huge, we're talking projected EPS growth of 65% over 5 years, that they almost redefine the metric.
Wow.
The market is basically confirming that this AI demand for memory isn't just a bump, it's a foundational shift. And their foundation looks solid. High profit margin, manageable debt.
And the technical picture for Micron is just, it's pure unrestrained momentum, right? Especially with that 10% jump on December 18th alone.
Oh, absolutely. Textbook bullish movement. It's trading strongly above its short-term moving averages. The RSI is at 56, showing strong momentum that isn't quite overbought yet.
Right.
And the fact that it's trading on super high volume confirms there's real conviction there.
And speaking of that conviction, the core catalyst was those blowout earnings. But the specific nugget that sent the stock flying was the announcement of unprecedented AI-fueled demand and the detail that they are sold out of HBM through 2026.
And that kind of supply constraint provides concrete validation for all the AI hype. It turns expectation into immediate reality. So you saw analysts just jump on it. Bank of America, TD Cowen, all reiterated buys and raised their price targets up to the $300 level.
But there's a catch.
But much like with Nvidia, we are seeing consistent insider sales from the CEO, Sanjay Mehrotra, and other officers all through Q4. So we need to keep that in mind as a broader sector trend.
Right. Okay, time for the paper money math for Micron. Using the December 18th close of $248.55, our hypothetical $5,000 investment gets us 20 shares.
And the consensus analyst target is $312.63. So applying that to our 20-share position would yield a theoretical paper profit of $1,281.60.
That's a 25.63% gain. It's less dramatic than Nvidia's potential upside, but that probably just reflects how much of a massive run-up Micron's already had.
Exactly. The focus is shifting from valuation discovery to pure execution.
Okay, finally, let's look at the veteran, Intel. This is a comeback story, but it's defined by volatility. Despite all its challenges, Intel's year-to-date performance is actually strong, up almost 81%, one of Wall Street's most watched turnarounds.
And Intel is a completely different financial picture. The first number that just screams trouble is the astronomical PE ratio. It's 3,422.
Right. It's a broken number.
It's essentially a broken calculator, exactly. It just means the company is being priced on pure hope because their trailing 12-month EPS is just a single cent.
So if we can't rely on PE, which is based on current profits, what metric tells us if their really complex turnaround is actually working?
We have to shift focus completely. You look at operational metrics. The operating margin is currently negative at minus 0.19%. This reflects that immense investment they're making, the heavy spending for their new foundry model.
And the debt.
Their debt to equity is also higher than Micron's, reflecting that cost. For Intel, you have to watch your gross margin expansion and future cash flow, not a static PE.
And the technicals really show that uncertainty. Performance last week was a dramatic drop of over 8%. Even with a huge half-year gain, the short-term trend is clearly down.
The indicators confirm that. Heavy selling pressure. The price is below both the 20-day and the 50-day SMAs. The RSI is around 42, so it's not overbought or oversold. But there's just a lack of immediate strength, and this all stems from the news where you have this ambition clashing with execution risk.
Right. Intel is aggressively pursuing AI growth. We see reports of a $1.6 billion deal to buy that AI chip startup, Sambonova. So that shows real commitment. But then it's contrasted with all this ongoing controversy.
Yep. Scrutiny over CEO deals, reports about testing chip tools linked to sanctioned Chinese units. The market is responding to that complexity, that uncertainty.
Which you can see in the analyst ratings.
You can. The consensus is a 3.11, which is basically a hold or reduce mix. And that cautious view results in a pretty conservative consensus target price of $38.48.
Okay, let's run the final paper trade. A $5,000 investment at the December 18th close of $36.28 gets you 137 shares.
And the consensus here is clearly more cautious. If we applied their target of $38.48 to our 137 paper shares, we see a much more modest theoretical profit of just $301.40.
That's only a 6% gain.
Right. And that low theoretical gain, compared to Nvidia and Micron, really reinforces the market's risk-adjusted, skeptical view of Intel's journey.
So let's synthesize the landscape we've just scanned. We have three vastly different stories here, all connected by AI, but each in a totally different stage of maturity and risk.
That's right. The true takeaway isn't just the growth numbers, it's the fragmentation of the sector. We're not talking about a single semiconductor market anymore. You have the AI monopoly, which is Nvidia highly profitable, but priced for perfection.
Then you have the AI capacity crunch.
Which is Micron, the explosive turnaround built on tangible, sold-out demand.
And finally, you have the AI turnaround wager. That's Intel. A complex effort defined by high volatility and execution questions where the PE is effectively broken. This disparity is the most important lesson today.
The AI boom is overwhelmingly benefiting these specialized memory and high-end processing providers. That shift confirms that in this new economy, not all semiconductor chips are created equal.
And considering the phenomenal growth forecast for both Nvidia and Micron, the data stack revealed something critical. Consistent, high-value insiders selling across both companies. And this raises a really important question for you, the learner, to mull over. When unprecedented, transformative growth is clearly forecast for the next several years, why are so many high-level executives, the CEO of Micron, directors at Nvidia, consistently reducing their personal stake by selling millions of dollars worth of shares in the present? That's the dot for you to connect as you process this data.